G'day there viewers, and welcome to Chapter 2, Part 2. We're looking at Bookkeeping 1, and we're looking at settlement discounts. Now settlement discounts, the legislation on this is currently just been changed recently. So the supplier here is offering a 5% discount, which is £5 for settlement within 7 days. Now you can't just take off the £5 from the £120 amount. The reason for this is that obviously the £120 amount includes the VAT, so you take it away from the net figure, so that will give you £95. So let's take a look at this now. So the goods total now is £95. The VAT then has to be applied to that, which gives you £114, not £115, which is what would have been the case if we took it away from the totals amount. So let's have a look at the settlement discounts. So obviously the seller would have an invoice that was sent for £120. Now we received £114 into the bank account. So there's £114. SLC. Sales ledger control is SLC. So now we've got £114 here. £120 here. So what we need to do is now give a credit note for the £6. So we send the credit note. Credit note here is will go for £6. So we put the 6 there, and the other amount would go to here, £5, because the goods total now is £5, and then you have £1 for VAT. So that would add up to the £6. So £1 for that. Okay, so that's settlement discounts. These are the entries that would be made for settlement discounts. That now balances 120, which equals that 120. The £6 is made up of the £5 in the discount allowed and the £1 in the VAT. Okay, so that's how you do this settlement discounts. Okay, HMRC allow you to adjust the output tax if the company doesn't wish to issue credit notes. This is another method that they can use for settlement discounts, but it's unlikely that you'll be assessed on this at this level. So we'll go into it more detail at level 3. So for now, don't worry about it. Authorisation of invoices. So whenever you're sending invoices, the manager must authorize the invoices above a certain credit limit. The reason is that credit limits are set, and if you need to go above that, then the manager will normally authorize that, and this is a form of control. It's to ensure that customers they don't obviously start buying loads of stuff and not paying for it, basically. So if you wanted to make a larger than normal purchase, then for on credit, remember credit is when you don't pay straight away, then your manager will need to authorize that. Checking invoices. Incorrect invoices will annoy the customer, so then it must be checked. Checking invoices, looking at the purchase order, does it match? Quoted prices, are they the same as the website has quoted? Is the correct customer being invoiced? So sometimes I've worked for an infant school and a junior school before, and we often get invoices for, I've worked at the junior schools, and we used to always get invoices for the infant school because they have the same name, but well, the majority of the name is the same, but the last part says infant school or junior school, so they're not the same school. And it's very annoying when you receive one invoice for that's meant for the other school. So make sure that obviously you're doing checks. All invoices should be checked. It's also a form of control and financial safeguarding that if 2 people check them, it's obviously better as well. The person paying and the person who raises the invoice or the purchase order. And yeah, everything should be checked twice by 2 people really, to ensure that everything's correct and in order. So other checks are the correct goods being set, quantity units, pricing, discounts, calculations, VAT. So yeah, all of these things need to be calculated and checked and before they're sent out. Often calculations of VAT and other items such as units and total prices, they're normally done by accounting systems nowadays, but obviously if you're using the manual system, which you still can, you have to check that these things are all correct. Coding. Accounting systems now use codes to make posting easier. So you can have numbered code, for example, code of 100. You can have lettered code. This is the lettered code that we used to use in Next, which stands for women's wear. Numeric code, a mixture of numbers and letters. So women's wear item 100, for example, is an alphanumeric code. This is a school that I worked in, and these are codes that they used, which are just numeric codes, as you can see. The department was 105, and these are each of the actual ledger codes. Okay. Right, financial records. Financial records need to be kept for 6 years, plus the current year. So the majority of these documents, invoices, credit notes, purchase orders, they all need to be kept for like 6 years. The more evidence that you can keep for audit, the better. So, you know, some of them are quite repetitive. So, yeah, it's whatever your policy is for your company. But the more records that are kept in general, the better it is for audit. Thank you very much for listening. I'll see you in the next lesson.